All right, welcome to Talk Tickers. Today, we are digging into Home Depot's Q2 2025 earnings call. And wow, this was a fascinating one. You had the headline numbers telling one story, but the market told a completely different one. So let's get right into the briefing. So, right off the bat, this is the big puzzle we need to solve today. On the one hand, you have the results. Home Depot actually missed Wall Street's expectations. Top line, bottom line, both a miss. But on the other hand, the reaction was, well, the complete opposite. The stock soared. So the big question is, what on earth did investors see that the rest of us missed in those headline numbers? And we're not talking about a little bump. They saw enough to push this stock up almost 4%. That's a 6-month high. This wasn't just a mild shrug off, it was a really decisive move, especially when you remember that in the pre-market, right after the numbers came out, the stock was actually down. So yeah, a pretty surprising market reaction. Our job here is to figure out why. Why did the market reward a miss? Let's break down that divergence and see what those investors were really buying into. Okay, so first things first. Before we get into the story that got everyone excited, let's just quickly look at the numbers themselves. You know, the ones that on the surface looked like a miss. And what's interesting here, when you really look at it, is just how narrow these misses were. I mean, look at this. Adjusted EPS came in at $4.68 when the street was looking for about $4.72, a few pennies. Revenue, $45.3 billion versus estimates of about $45.41 billion. Again, super close. But here's the first clue. U.S. comp sales. They were actually positive at 1.4%. And that, my friends, was the third positive comp in a row. It's a small detail, but it's a huge hint at the real story brewing under the surface. Okay, so that's the real story behind the stock. It's about 3 key themes that management laid out, which completely grabbed investors' attention. Let's dig in. So, theme number 1 is all about their pro customers. They are going all in on building out this massive pro ecosystem. And you can just hear the confidence in this quote from CEO Ted Decker. He's basically saying that the big SRS acquisition they made isn't just some side project. No, it's a core part of their growth engine, and it's already crushing expectations. And this is where you start to see the sheer scale of what they're doing. This is not just about buying one company. It's a whole puzzle they're putting together. You've got the SRS acquisition, the GMS deal that's coming up, a new trade credit platform, enhanced order management. They are building a fortress around their pro business, a competitive moat that's going to be really, really hard for anyone else to cross. All right, theme 2. And this really builds on that first point. We're talking about a massive advantage in technology and logistics. I mean, just listen to this quote from Anne Marie Campbell. Fastest delivery speeds ever, for the most products ever. This shows you they're not just a retailer anymore. They are transforming into a full-blown logistics powerhouse. And, of course, that kind of operational muscle translates directly into sales. I mean, boom, a 12% jump in online sales year over year. That doesn't just happen by accident. That is the direct result of them pouring money into things like machine learning for delivery and making their supply chain smarter. Plain and simple, they are winning the digital game. Okay, and the third and final theme that really got the market excited was just how strong demand is. You know, everyone's worried about high interest rates slowing down big projects, and sure, that's happening. But what Home Depot is seeing is a boom in smaller projects. I mean, 12 out of their 16 departments posted positive comps. That is the strongest, most broad-based performance they've seen in over 2 years. It shows you the core business is incredibly resilient. So, with all that in mind, the pro strategy clicking, demand holding up, it's no surprise that management's guidance for the road ahead sounded pretty confident. Let's take a look. Now, the headline here isn't what's in the guidance, it's that they reaffirmed it. They didn't lower it. They're sticking to about 1% comp growth for the year. But here's the really crucial part. This forecast assumes zero help from the macro environment. No lower interest rates, no big housing recovery baked in. This is their baseline performance. So for an investor, that signals incredible confidence and control over their own destiny. And that's what's so exciting about it. That conservative baseline is like a launch pad, because now you can just start stacking up all the potential upside. What if mortgage rates do come down? That's a huge catalyst. What if they execute perfectly on bringing SRS and GMS into the fold? That's another one. You've got digital growth, new stores. All of these are things that could push their results way beyond what they've guided to. Okay, so let's put on our analyst hats. After listening to that whole call, what's the big takeaway? What's the actionable idea? Here's our take on the most compelling trade heading into next quarter. So here's the play. It's what we call a pair trade. You go long Home Depot, but you hedge that by shorting a bunch of their smaller competitors, those specialty distributors. At its core, this is a bet that the big are going to get bigger, and the gap between Home Depot and everyone else is about to get a whole lot wider.
And here's why we think that works. Home Depot is building this juggernaut. It's a fully integrated system of stores, warehouses, and delivery that smaller guys just can't compete with. It's a moat they can't cross. And then you add in things like special trade credit for pros and their amazing logistics. That just cements customer loyalty. And with their massive scale, they can handle rising costs way better than the little guys, which means they can slowly but surely squeeze their competitors' margins. This isn't a quick flip. It's a long-term play on them just gobbling up market share.
So where does that leave us? It all comes down to our official rating on the stock, outperform. We think with the way they're executing and the powerful competitive advantages they're building, Home Depot's stock is set to beat the broader market over the next 12 months. And that's our briefing. Now, as always, please remember this is not financial advice. You've got to do your own homework. Thanks for tuning in to Talk Tickers.